Check 1, 2, check 2, check 3. I got you, Ron. Love you, buddy. Thanks for coming on by. I'm gonna get this class started here in just a couple seconds. Welcome back, everybody. Please let me know that you can hear my voice in the chat. Welcome back, Master Students, and welcome everybody on YouTube. So far, we have a few people coming in now. Good deal, good deal, good deal. Okay, guys, we're gonna be getting started here in just a second. So let me just make sure that you can all hear me, right? So if you can, if I can bother you to type it in the chat, right? Say, all good. Let me go ahead and turn me up. Check 1, 2, check 2, check 3. Looking good. Looking good. All right. Thank you. Thank you so much. Nice. All right. You know what? I think going a little blind here. All good. Perfect. 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 Okay, team. So let me go ahead and introduce, of course, right? First and foremost, we're going to introduce a class. So welcome back, Master Students. This is track 8, 0 week 5, and this is going to be your final week, right, for Introduction to Executions / Conditioning. Now, we are officially going to talk about some entry conditions. How do we determine the entry? And I know that many of you were actually a part of the live stream here just a little bit ago in the YouTube platform, which I thank you for. All good, right? So we're going to go over some of the criteria that may or may not have happened there. As you may know, right, we kind of put together a thesis here that had a lot to do with a head and shoulders, right? So we're going to use XRP here for the execution process. Okay. Remember that executions comes along with conditioning, which conditioning there is, therefore paired with psychology. So if we have a plan of executing, say, a part of your portfolio, well, we should know what that part of the portfolio should be, right? Okay, so that all falls in line with how good you believe the play to be, even if it's an asset that you already know is gonna go to $1 million or whatever, right? It doesn't matter. The point of this is that so we can create some consistency along the lines of along the lines of continuously executing. You know, some of the criteria that I've used here for prior students is that we've used some of the, you know, you guys are holding bags, right? I assume a lot of you are holding bags of XRP. And if there is a way to use the XRP bags that you have, and right, probably sacrifice a little bit, trade that little bit, right, using the ebbs and flows of the XRP volatility, well, then you could use that cash to bring in more for your long-term bag, right? So that's always been the idea here with the ARCa bulls since I started observing XRP not too long ago. I'm not an OG of XRP, not at all, right? In fact, somebody that I care about asked me to take a look at it, right? So I looked at it, and it just so happened to be a week before the price action was going to take off, from literally 52, 60 cents, 48 cents, around there. So I started speaking to the community, and I said what I said, that this was likely to run into, probable over $1, and we were trading, 40, 50, 60 cents. So that kind of left a sour taste in many people's mouths, but they felt that I was speaking in discretion, or that I was speaking in I don't know. They thought that I was probably guessing or something, right? But the thing is that I use like we said in the live stream, I use the combination of psychology, a little bit of math, right? A little bit of statistics here and there. And we combine it all, right? We combine it all into a jumble here, whatever that criteria and whatever we're trying to shape for you as individual traders here, we use that in combination, right? We use that to determine the higher probability outcome alongside tangible price action. Tangible being that we actually have a physical support or resistance, a trough somewhere in price action, like up here or something, right? So we use that against probabilities, and it seems to work, right? There's behaviors that there are embedded behaviors that the asset will go through its trading cycle, that it probably has it won't ignore it a lot. And I've given a terrible example before of that type of behavior, but I'm not sure that I'm not going to repeat that right now because it's a little silly, but it's all good. So how can we enter the play now that we know, right? We've collected from the beginning of this, the beginner's course, we've now kind of collected a series of, actually, you know what? We've gathered the knowledge here over what the toolbox looks like, or what the shop looks like, right? So I come in here as the instructor and I tell you, okay, this is your shop, right? This is your shop here. You have your tools of such and such here. These are the tools for that. These are the tools for that. And these are the tools for that, right? And now that we're approaching the end, these last 4 weeks, well, we've kind of put together we're kind of giving you hints over what's going to be happening next inside of the strategies mentorship, which is after the beginners one, right? So now that you can see what the tools are that you have, the tools meaning that you have like a momentum indicator, or this is volume here, right? And then we could see that we had like a formation at play, and then you can have like this volatility and momentum, right? And then another little tool here. So those are the tools, right? You get to know them. You get to understand what they are. So now that you understand what they are, strategies will introduce to you how to put them together and how to use them accordingly. So what is the appropriate tool to use for this 2005 Nissan Sentra, right? Why are you bringing out why are you bringing out that huge thing that's used to remove the tires from like a tank? This is a Nissan Sentra. You're not going to use this big, huge socket that you remove the tires from a military tank. Like, what are you doing, right? You're out of your mind. So that's what I mean, right? We're going to understand what tools are going to be appropriate and how to combine them. So combine them being that, imagine that you're working on a car, or something, and you want to wrench inside because something happened or another. And there's a bolt somewhere in the engine where you can't really reach, and it's kind of, it's curved. So, there are tools that you can attach to your power tool, right? And you have a thing that can curve and reach there, or you just take it all apart, right? It's up to you. So that's what I mean, right? We're going to be able to combine those types of tools that can give you a certain outcome. So, and that is what happens in the following mentorship, being strategies, after this 9-week one that we've gone through, this being technically your week 9 or 10, I believe now. So I'm excited for that because strategies is really my favorite component. I love strategies so much because we get to find who you are. And with that, you are likely going to start seeing results. Now, remember that strategies is kind of what we're showing you now, right? Even though it says executions, which is the mentorship after strategies, and then executions/conditioning psychology, that's the one after execution. So 4 segments in total, right? Like you're a freshman, sophomore, junior, and senior, right? So you're going to go to your sophomore year now. Now, strategies literally applies everywhere. So that's the whole thing. Learn the tools, apply the tools, combine the tools, know how to, work them, right? Then apply them, apply the tools, and now then actually work on a client's tool, on a client's car, right? Or something. That whole process. Hold on just a sec, guys. My little guy's here. Hold on. Apologies, team. I'm back. Let's go ahead and continue. Okay, so what exactly were those tools? Okay, so we learned from the beginning, right, what a candle is, the properties of a candle, right? How does it open, right? Your bars open, your red bars open on top, your green bars open at the bottom, right? Your wicks show you the history of the bar. Now, we also learned what they would do in pairs, and we also learned what they would do in small groups, and we also learned what they would do in larger formations. That's critical to know. Your raw price action, right? So that's a set of tools that we learned. We also learned some indicators, like an RSI, or a stochastic momentum, like this one down here, or volume. So now that we have some type of technical understanding here, and we're now kind of showing you the basics of execution, let's see how we can make that happen. So, knowing statistics is okay too. And this is what I mean. So, if you remember, if you were there during the live stream, we were identifying a short-term formation, right? It was like a head and shoulders. It was somewhere over here, right? So we ended up getting a downside, or we ended up talking about a downside that would reach somewhere around the 250 to 251 or something, and we put together the whole thesis. In fact, this was the exact target that we were waiting for the downside before we can make an upside continuation, right? And here you go. So it did work, right? So whatever we spoke about during the live stream here, just about 2 hours, an hour ago, whatever that was, it worked out pretty nicely. So we spoke about the 6 month. Remember how we identify the 6 month retrace having a 50% pullback, being similar to the 1 day pullback since we just got it closed, right? So it retraces 50% and then it continues. All of that stuff has a gigantic confluence, and even the geometrics being around that 250, 251, 249, 248, all this area here was signaling we are probably going to bounce from somewhere around here. So now that we can determine that we broke out of this critical resistance, what we spoke of, right? That tells us that this would be the highest probability and not this here. Now, why is that the case? Because there's a thing in price action that happens right? So when you're running to the upside, right? You make this series of ladders to the upside until you reach a critical high that then makes a pretty sharp drop at first, usually, or somewhere in the middle. And then you experience this thing called a consolidation, right? So this consolidation tells you that you're either going up or down. So it would be up to us to determine what makes it bearish or bullish. Okay, so the miraculous thing here is that we break out, right? Cool. And then we come back and test what we just used as multiple resistances up here. All these are resistances, and we're now in the process of converting those resistances into a support. So we create this gigantic upside, we come back, it's called a false breakout, a fake out. So we get this top side, right? We come back down and start validating this thing in here just like this, right? As soon as we feel, the sentiment feels that it's okay, we then run, validate one time and continue, and we start doing that same process all over again, right? So these are the typical stages of price action. So should you have a breakout from a current, from a a chop zone is what we can call it, a consolidation zone, you are likely to come back and test what was a resistance to convert it into a support, right? And then you do it over and over again. Should you have the upside continuation? Okay, so that now tells you that, okay, this is interesting, right? Because you did talk about another area that we would consolidate in first, right? After we get this parabolic upside. Cool. So that means that there is even here, right? We created that sharp downside and then we started consolidating. Okay. Well, that tells you that there are extra zones inside of the price action that we may be observing and not many other people are seeing. So we're going to color these light blue. We're going to identify these as the areas that can be called liquidity pools, where most of the price action or most of the buyers and most of the sellers or whomever it may be are located. They would be located at these areas, right? Like this one too. Okay, so let's go ahead and color it like that. All good. Perfect. And then this would be the red line up here. Sorry, just about like this, right? For the inside of this price action here. Okay, so now that you know that you have a liquidity pool here, what tends to happen is something interesting. It's not just consolidation like this. There is typically a dip right before a rip. And I really mean that. The way that you hear it, the way that you've seen it inside of like other like influencers or pictures of raw price action and stuff, giving you like ideas of how to trade. That's true. That's true. You know, don't believe everything that you hear don't believe everything that you hear or see inside of the internet, right? In fact, when you choose a mentor and stick to the one and take everything else with a grain of salt. You want to make sure that you as an infant, as learning your trade, the actual charting here, you want to make sure not to wash your mind. And I said infant for a reason. That means that if you are in your infancy, you come out of the womb to look at mom, right? So you say mom, and that's mom. So what do you think your information would feel like if you came out to 300 moms? So you want to make sure that you are very selective over the people that you listen to, whether it be me, whether it be whomever it is, just make sure to forward test them, right? Make sure to forward test them as this. If they're telling you that there could be an upside to something, well, okay, you're saying upside, so, and when? Are they saying when? Are they saying a specific target? Are they elaborating this well? Do they speak to you correctly, even though they're not speaking to you directly? Do you hear them though? You know what I mean? Are you hearing them? That's what I mean. So if you could if you could really get that understanding and know that this person, whomever it is, you know, you can relate to this person. Okay, good. And you forward tested it, and they're getting their prices right. So then in that case, maybe you want to start to kind of apply strategies that this person may introduce. But this would really be later on, you know, because then you would be like in school where you have several teachers. That's all good. But in your infancy, when you're first starting, try to stick to one mentor, as that one mentor will show you that person's ideologies and methodologies and analyses and whatever else, right? And you would learn and be exposed, or you would be, it's an exploit of the market and their personal views. So then your curiosity would naturally be born. Okay, so what I'm speaking of here is not to do anything with that stuff. This is all very basic knowledge. This is just basic price action, but I need you to understand what the liquidity pool means, right? Because these liquidity pools are incredibly important. And remember what I just said down here, right? We would have that dip before the rip. Now, I speak of that all the time. I mean, really, really all the time. I can give you an example here. How about this? This is the dip before we rip on July 5th. And we're on the 10th right now. And what's happened to XRP since then? You know what I mean? So that's what I mean. This was in that video was a clear example of what this is doing. So these are basic things of price action that people don't tend to believe. And it's not about believing. It really is about statistics. How many times has it proved correctly? Does it have an underlying behavior or a characteristic? So in reality, what I'm saying is remember to pick out, in this example, we're on XRP. XRP and the whole of it all, including the institutional traders, whales, retail investors, algorithms, and everything is one entire ecosystem, one persona, one character, XRP. How does XRP behave under certain circumstances? What does it do on a daily closure? What does it do on a tariff announcement? What does it do when we close a monthly or a quarter, right? So, in business, literally in business, the quarters are very important. We're at our quarterly review. We're at the quarter close. We're at the quarter open. So you need to submit a whole bunch of papers, a whole bunch of tax information, a whole bunch of whatever, but it has to be done at the quarter end. So that is incredibly important for every company that has that's public. And here we are with XRP public, of course, right? So the whole of it all really portrays to you, it puts together a picture, it puts together a person. So you, as a mass psychologist of the entire market, you will look at XRP and you will study its behaviors based on its complete trading history, so that you can get some type of an idea as to where it may or may not go. Because from its inception, there's been a lot of experience that XRP has had. But it's still very, very young, which explains all the volatility. It's finding itself. It's finding its top. It knows where the bottom is so far, but we need to know what the potentials are. This is exactly the behavior of a human from birth. The human will be born. We cater and nurture the human. We literally care about this human being, our baby, right? And we see him or her grow, and they grow and they grow and they grow, and they become their own person, and then they explore how far they can go. Sometimes we're scared as parents. Sometimes we feel like they're going to fall and eat it, even though we have to put money behind it, and we're going to lose all our money. Sound familiar? Okay, enough of that. Let's go ahead and now understand that the behavior that we're observing here is it's actually a general behavior. The general behavior means that every human being breathes. Every human being can in some way hear. Some of them may not, right? We all the majority of us have 2 arms and 2 legs, right? We have, the saying is like, it's like a butthole. We all got one. It's like that. This is that kind of behavior. What I'm showing you here, it's a general behavior. This is not specific to XRP, not specific to Ethereum, not specific to anything else. It's specific to a general perspective. So your visceral perspective here is completely balanced. This is at the 50. This is at the break-even line. Okay. All right. So understanding the liquidity zones are understanding that you have prior price action that has been reached there before. So this means that if you have a lot of confluent bottoms, historically speaking, right, alongside these areas like this, well, there is a chance that you can probably see price action retest that area should you have the current conditions for it, right? So we mark this area off as this here, right? We mark it like this and probably change the color of it just a little bit and give it a little brightness to it, just like this. Okay, so we're going to identify this area as your liquidity zone 1, right? And this would be another liquidity zone up here. Now, it's the liquidity zone because it went upward and then it came back down and consolidated, tested, retested the top here and continued and then started testing that area, right? Thus creating a new liquidity zone when the upside does realize, right? So let me get rid of this thing here and adjust the size here. So all of these little areas that we're catching here, those are all liquidity pools. So that means that when somebody is saying, oh my goodness, we are about to rocket ship to the upside, there's typically this that happens. You'll get to the 50% usually of your next area, trick everybody, right? And right up in here is when you don't have the actual volume, you don't have volatility increasing, you don't have anything to actually back the upside. And at this moment is right when everybody gets trapped. The first breakout, it's not usually the one. So things false break. Then you come to the downside and guess what? The same thing happens here for the bears. So this thing comes down, drops into the liquidity, which we already had used, right? And then we reject and continue to the upside, thus creating the next top side, which will eventually become the next liquidity pocket. And that tends to happen over and over again, every time. It's almost as though humans put it there. We kind of did. We do this. And observing these things in price action tells you that there is a play, hence the name. The bears and the bulls. There is a play at hand. So when you look at price action and when you see the structure of things, you can understand that, oh, I know this play. This is a ladder up, right? Consolidation, chop boxes, we're going to fake out, and then also false breakdown. So false breakout, false breakdown, right? Then continuation to the upside. What's the momentum? Is it being built during an upside? Yeah, so we're building during an upside. Consolidation, fake breakdown. Fake breakout, fake breakdown, upside, resist, next liquidity pool, consolidation over and over again. Usually happens for a few of them, right? You can catch this trend to be around 6 or 7 phases of it, and then the thing turns around. Some people may call this a Wyckoff accumulation phase. I don't practice that. I don't practice Elliott wave theory. This could also be considered a 5-wave impulse upside, right? So this could also be that, but I don't practice that. Or I can just say that statistically speaking, these chop boxes tend to do this or tend to do that or tend to do this. Call it whatever it is, it's just what I observe, right? Okay, so now that we're knowing that there could be this area here and that there also could be a breakdown here that probably doesn't have a liquidity pool in it, right? There could be times that are, how you say, outliers that don't actually apply, right? They fall into the unknown. but they do happen here and there. But you can't measure those. And you don't know if they're going to happen or not because you probably don't see a liquidity pool in this area at all. But it'll do it anyway, and then it breaks out and breaks down and whatever at a random time. So those types of things are the things that we need to be aware of and protect ourselves against. That's where risk management comes in. Okay, so now that we're speaking on knowing this play, let's go back to the price action of which XRP kind of did, right? This was from the live stream that we just had, and we were determining potential entry conditions in here. But do you recall talking about this top side? And it just so happened that it landed very nicely with the 1.618. But I told you that, you know what? I know that it's there, right? I know that it's actually there, but I'm going to give you my honest opinion. I feel like it's going to drop in here. Now, why would I tell you that? Well, that's simple, guys. It's simple. The thing is that is the resistance top that it printed, right? But I also have to think that we're dropping from pretty high. So if we're dropping from this high up here, and we're then coming down to that one target, well, that's not going to be a solid landing, right? We're not gonna, out of nowhere, jump and then come down to that surface here, right? And then just immediately stop. We're not going to stop. That's not the way gravity works. So this is where a little bit of physics and some logic kind of come in. So we use you're going to learn this in strategies, but we use the, time against price to understand how deep that goes. But that's the point. It's a liquidity pool. It's in the word. So you jump and you likely don't stop at a hard target because that's not a hard target. You dive in it and then you go. Pool. That's why I gave you this target earlier. The discretion was leading to it, which is confluent to an area that I could see already massively supported. And that's how we identified, without you knowing, without me explaining it to you during the live stream, because I don't have that time. That's how we identified our liquidity pool. And we nailed it, didn't we? And remember that I actually left the stream before that happened. Right? But everybody was thinking, you know what, man, this guy got it all wrong. It dropped only to around 252. I'm going to give him the credit. It's all good, So this thing comes back up and tests literally the same resistance. Then it drops and, oh my God, he's right. It's going to happen. Nope, he was wrong. ARCa was wrong. He didn't get it. And it comes back and tests the same damn resistance. And then guess what? Bam. And it happened. And it wasn't that I was wrong or right. It doesn't matter who called it. It doesn't matter anything. What matters is that that's an embedded behavior that typically happens at the close of a day, at the close of a 6-hour time, at the formation here. The Head and Shoulders has that target there. Liquidity pool located here. I mean, dude, come on. When you know the rules, when you know your tools, right? When you know where the shelves are, when you know what to pull out from where, you're going to get faster and more efficient at it. So this is not impossible. It feels improbable maybe at the current moment, and it feels like it's a hieroglyph that you go into Egypt and observe. It's not any of that. It doesn't have to be, because remember when I told you that, guys, I teach this, right? I was shilling my course. I was shilling it. And I'm saying, guys, this what I'm teaching you here, it's just scratching the surface. I did this. I'm just scratching the surface. And that's really imagine the information that I'm sharing with you now of what it actually was. You know what I mean? So that's you, as the Guardian is saying in the course here. You got to know the play. Yeah, identify the play, because you'll see that the play has a high output probability. Now, how do you know that though? Well, it requires a little bit of work. This is what I mean. So you have a Head and Shoulders formation here, right? It's on the 3-minute time frame. So this means that we got to go in the 3-minute time frame and look back. How many times have we made a Head and Shoulders appear? Here's one. Right? And how many times has the actual target, have we met those targets is what I'm trying to say. Well, let's kind of try it out here, right? Why don't we do this? This could be your neckline. This could be your neckline here. So let's just say that we take the trend line from this area here, right? Just like we do, all the way down to that, from the top of the head to the neckline, and apply it to your right-hand shoulder. And let's just see, for curiosity, if in the 3-minute time frame, this head and shoulders worked out. So we'll apply it here, and this would be the target applied. Oh, crap, it did work out. So it moved just about 95, 96% the target that it suggested. Very cool. Okay, nice. But why, how is it that is there an explanation over why I maybe overshooted? Could there have been another target or another way to observe this to, give me maybe a higher probability output? Well, actually, maybe. Why don't we test that too? Because we're critical here and we're being super anal about it, right? Let's try it. Because I suggested this huge shoulder alongside this huge shoulder. What if we suggested just this tiny one that we initially spoke about and not this one here? So that means that your regression line would actually be a little simpler, right? Something like this, right? For these areas here. Okay, so now why don't we do that? And I almost feel like we're going to come short on this, right? So if that's the case, well, let's go ahead and take a consideration here and apply this to the bottom of your right-hand shoulder and see what target that gives us. Holy God. Wait, but oh my goodness. ARCa, is this always happening? Check. Guys, in YouTube, can you please let me know that you can hear my voice? Check 1, 2. Okay, got it. All right, good. I'm happy that you guys can hear me. Nice. So how about that, right? How about that target and figuring it out and now noticing that, dude, wait. How was that so precise? Well, it's just because we got a little more detailed with our output on the formation, right? Okay, Ben, I got you, brother. No problem at all. No problem at all. So that's it. It's interesting. So now you're noticing that, okay, cool. We have a head and shoulders there that worked out almost exactly to the penny. Wait a second. It looks like we have another one here. Is that another one there? And then you go and then you kind of look at other ones or whatever, and you find out a million ones. You test out a million of them. Right? You find out that there's a whole bunch of them everywhere, right? I mean, and then you see how many don't work out, right? Like, for example, this one, certainly that did not work out. That only dropped around barely 0.25%, because this thing would have to be a very well crafted regression on this, right? This is your shoulder, and head, right? So if you're looking at your downside take profit on this, well, that'll be showing you a very large downside take profit in comparison to what it actually did, right? So here is that. And you're noticing that it did get the downside, though. It did. But why would it stop? That's the thing that you also have to kind of pay attention to. Well, look at this area here, right? And then if we look back, there's probably other areas that it's very confluent to or not, but it's just this is your primary reason why it stopped. This area here touching, this area here touching, right? And that is very confluent to this top side coming right back down to that area where you can create what's called a bear trap. Okay, so it sort of worked there. And then you go back and you start looking again, right? You look back as much as you can and you find out where those formations are, right? Here's another one, and that one looks like it did play out pretty damn nicely down here. Okay, cool. So when you gather all that information, right, when you gather all that data, you're thinking to yourself, okay, so what is the actual output on this? Well, it looks like we have around 30 iterations of this head and shoulders formation, and around 26 of them proved correct. They actually met their actual downside target. So what do you think is going to happen with 27 or 26 correct out of 30? Should you reach your head and shoulders again. You know what I mean? If you reach your right here, you know, this is your head and shoulders formation. Shoulder, head, shoulder. What do you think the output is going to be on this? Well, it's going to be damn well near 100%. So let's go ahead and see how much we have in our trading portfolio to verse against a play that has that kind of probability, because we back tested. We looked. We decided to look. So that means that now we have a statistical edge on this play. So you can't tell me that the Oakland A's for baseball, you remember that movie that came out with Brad Pitt and what's his name? Noah, I forgot his name, whatever. But he was the kid that essentially applied statistics, right? Moneyball. That's right. He applied statistics to the players, to Jonah Hill. That's right. So he applied those statistics, right? And he started focusing on different things that the old school, coaches and players, whomever else, were focusing on. They were worried about a great education, great family, all-American, and absolute performer. But that doesn't mean that this performer is going to perform well against this player here, or what their statistics are as far as how they throw, pitch, how they do whatever. So when you start breaking that down, you then start to notice there are specific behaviors that cater for something else, thus introducing you to using the tools that are better, more appropriate to the current trade or setup. So if you're using it in baseball and you're using it in car racing, and they're tracking you, right, even with your Apple Watch or your Samsung Ring or whatever that is, or your Palm thing for your phone to read your stats, right, how much you're sleeping, how much you're eating, why wouldn't you apply it to the trade? So if you know the world runs on probabilities, how are we not doing that for the trade, right? Okay, so we got the 80-90% probability of this play. So say for example, we have a $10,000 account to trade, right? And many other people here, guys, let me just, I need to use my hands. Let me restart this thing. Hold it. I'm just going to reach the camera. Hold on. All right. Here we go. So we have an account here, a trading account that's worth $10,000 liquid, right? Okay. Now, you are going to start defining to yourself what would categorize the next 258. Nice. Very cool. Okay, so what would categorize, this type of risk? This would never, I need you to know this. All of you need to know this now. Please understand that you can trade how you trade. You can always do as you will, right? It's okay. But no, now that we have the statistics proving a probability of around 80 to 90%, right? Your $10,000 account means total worth, okay? That's your total worth. But what are you allowed to trade from here? That's the trick. Your risk management starts from just knowing that you have the availability of $10,000, right? Okay, next, we'll determine here how much it would take for you to actually make some cash should you lose it all. But the point here is not to lose it all, okay? So let's just say that your full port, right? Your full port on this would be worth $6,500. So at any given moment that you have an A+ trade, right? You'll hear that often. So should you be introduced into an A plus trade and you are looking at it, you know what? This is a high probability trade and I will absolutely full port. That does not mean $10,000. That means $6,500 allowed. Okay, now that's your A plus trade. But what if it's a B plus, right? So now your statistics are reading a potential 78, 74% probability, not 100, right? But it's still 74%. So you're looking at your B plus trade as like, okay, well, I have to be, kind of strategic about this and make sure that I can put the proper amount. So let's just say that your B plus trade would be maybe $4,500 your port, right? B plus. Okay. Now, what if we know the statistics and we're reaching now a 58% probability that we'll get the move? So that now leads you into a C plus trade, right? So C plus trade comes in and you're a little perplexed. So you're thinking to yourself, what am I going to allow myself to trade here? Me personally, if I have a C plus trade, I probably won't touch it. But what if there is a chance and you have a credible source or something, right? What if there is a credible source? Fastman is not getting any volume there. Reboot, my brother. I'm going to say it here. I'm going to say it right here. Fastman reboot. So let me know if you guys can hear my voice, guys, in the Discord. I know that, there's always a little bit of an issue happening here and there. All good, all good, all good. Okay, yeah, try the YT. That's true. All right, so I personally, my personal thing, right, is that I don't know that I would touch the C plays, but we're putting a plus next to it though, and that's probably because of what I said, right? We have a great source or someone that can tell us, like, you know what, dude, I know this is just a trust me bro here, but this is like a deeper, like harder trust me bro, so maybe consider putting in some money on this. Okay, so C plus trades, this is where you meet yourself, because this is a good guy, right? There's a good person, whomever it is that gave you this tip. And you're thinking to yourself, damn, it's against my rules. That's what you have to repeat. Rules. Rules to the trade. You never, ever, ever fall outside of your rules, no matter what. So you say to yourself, okay, for a C plus trade, I will trade no more than $1,000. And even that is too much to say. So let's just say this. C plus would be a max of $1,000. So I'm giving you the full ports of each graded value. Now, if I can give you this understanding here, you have an A minus and an A in between. You have a B minus and a B in between. Figure that out, right? Figure that out. So now that let's go back, right? Let's go back to this play down here. Since we came back with the probabilities of around an 88 to 92% probability, well, that's your A to A plus trade. And is that it? Is that all that you're waiting for, though? Would it just be that you're trying to get your overall information just based on a formation? Well, no. There should be further criteria too, though. Right? What type of company is it, and do you know it, right? Do you know that kind of company and their technology or whatever it is? Do you know what they're trying to do? You're not an investor in this case. You're just a trader trying to trade the volatility, trying to see if you can catch a move here that can be worth a lot of money, which is what pretty much we do here every day at ARCa Bulls, right? We try to trade the interim and pick apart those plays so that we could gain more XRP and put it in the long-term bag and then do it over again, put it in the long-term bag and do it again, right? Okay, so that means you got to be sharp. Okay, so then you look at your stats, right? These are the key stats. You see here that it has, let's see, your market cap, right? You need all that information. Market capitalization is 152 billion, right? And the circulating supply is around 59 billion. Circulating supply means that it's the available coins that are circulating, or the available shares in the equities, right? And the market capitalization is literally what XRP, the ticker, is worth, $152.21 billion. Okay, cool. So now that we know these things, and you're seeing that it's worth $2.58 at this valuation, that alone, it's criteria enough for you to understand that you don't want anything more volatile than these key statistics or metrics against this price. So that's telling you that you like the price that's roughly around $2 to $5. See that the asset is actually within the network of this, or maybe a similar asset. And also you tend to trade market capitalizations of around 150 to 200 billion or 250 max, right? And you want the circulating supply to be anywhere between 50 to 150 billion. That is part of your conditions too. So now, does that apply to your trade? So say, for example, this one is a little too small for me, right? So now the A plus trade turns into an A minus because it's a little too volatile. You're used to something that has maybe, your market capitalization being a little higher, right? Maybe you want something that's 500 billion to 700 billion. And your circulating supply, you maybe want something either around the same place or less. So that means that your criteria now, it's starting to dilute a little bit. So that means you drop your risk level. So when you drop your risk level, you're naturally dropping from your full port. The point of this is that should you play this strategy, right? The specific strategy that we talked about here on a breakdown of this head and shoulders formation, this is one strategy that you take note. Always, always write your plays down. Never, don't trade randomly. So you're going to say, and I'll tell you why. Strategy number one, head and shoulders breakdown, right? So you're going to write entry and it met, you're going to say that it met everything, right? So you categorize it as an A minus rating. So you're going to put head and shoulders, A minus rating. Your output was, or your whatever you entered, right? Your risk, you'll put it down. And then you're going to say that the play either worked out perfectly to the take profit target or not. So whatever other statistics that you want to read, you'll put them down. And then you'll find and locate another one, whether it be H-bar or XCN or XLM. You're going to find another formation like it. And trade the head and shoulders inside of H-bar and do it again. So then you're going to say, this one was XRP, this one was for H-bar, head and shoulders, right? And you do the head and shoulders formation should they appear all the time. You collect around, a few months of iterations, a few months of wins and losses, right? You start your next strategy. And let's just say that the next strategy is going to be the one that we spoke of up here. You want to do consolidation, false breaks into the next upside target. So you're going to then play breakouts, consolidations. Okay, so your breakout plays, you're going to do breakout play number one, right? Whatever ticker you want. And then you just start collecting all the data for that for the next few months on that strategy. You do the third strategy. You do the fourth strategy. And then guess what? You have a data set. So now this data set, you'll be able to break down into probabilities. So it'll tell you which one of those strategies is performing the least. So then you'll know for sure which one you will stay away from because it's impairing your portfolio at the end value. Right? You want the highest performance. This is called optimization. You are proving robustness for your strategy. This is a system. So that means that the system is being tested, forward tested, and you're noticing that the system doesn't like a consolidation, breakout, or breakdown play. So you remove that out of it, test another strategy. And then you test until you get into the 90 percentile of each. Imagine the power you would have under your belt. It would be infinite. So then you're going to be always right in the targets that you choose, in the targets that you prepare. right? And mind you, this is a 3-day-old chart that we spoke about, right? I mean, 3 or 4 days ago. Speaking of us, from what? I think this was the entry down. Sorry, no, the entry was down here somewhere. There we go. There it is, right? Our entry was here at around 22, 219.98, right? So 219.98, that was your entry on this. And we were explaining resistances and all that good stuff and how the likelihood of this would be pretty damn likely to hit this specific zone. Whenever I color something yellow, that's my focus zone. What target is that? 259.50 to 261.55. Where did we just reach? 258.79? How did you know that it was going to go up there, brother? What did you even do? That was sorcery for you to know that it was going to go from way down there all the way over there. It's not, guys. It's just, I'm telling you that once you start understanding how price against time works, then you'll see that psychologically speaking, we enter this mode. We enter this pocket, right, to where we know how these things are like, oh my goodness, I see this happening. We're all getting excited just like we did the other time, and it's showing in the same order. And then you start looking for the same metrics. We pointed it out. Stochastic momentum pointing at exactly the moment where it broke out from the last time and it created that huge upside from 40 cents to around 30.60. We're right there. That's where we broke out from. And no one told you. No one told you except ARCa over here telling you this random ass stochastic momentum with moving averages and mathematics and statistics and blah, 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 and diddle-diddle-diddle-do. Diddle-diddle-diddle-do, right? I don't want to hear nothing about your statistics. Diddle-diddle-do, right? And then, come on, man. You know, it's at some point, yes, you know, it's absolutely right. We have to make sure to observe as many things as we can. But the trust me, bro, from the dude over there in the freaking cord or the Instagram is not always going to be the best answer, you know, especially if you don't know the guy. But what if you didn't need anyone to validate these upsides and you just did it yourself? Well, you're not going to be wrong. You're not going to be right all the time. You're going to suck a lot. You're going to get hit a lot. You're going to fail a lot. And it's a high tuition. But that's the price to pay, right? Should you know what to risk? So if $10,000 is what you have, then why don't we just go ahead and load $10 and start forward testing and enter the risk of 20 cents? Because you know what happened with me? I only had $88 and I didn't have the day to trade because I wanted to trade stocks. And my son, having the iron deficiency, he would miss his naps and go to bed at 9 and then miss the nap during the day. And I'm like, oh man, he would then go to bed in like 3 days later, he would then go to bed at 11 p.m. And then 2 to 3 days later, he'll miss a nap again, right? And then we'll be going to bed at 2 a.m. and then 6 a.m. and then 10 a.m. and then 2 years of that. So I had to test this forward. And my entries were literally, I'm going to bed right before the market opens. Here is my entry. This is my stop loss. This is my take profit with a 72% probability. And my worth is my worth. So I was starting with an $88 account, risking literally in the single digits and gaining in cents. The cents turned into single dollars over the span of a couple weeks. In about a month or two, it started turning into 2 digits. And I was blown away that I was seeing the results of like a $14 gain. And then that turned into the deeper 2 digits, like $40. But it was taking day by day to practice this, the way that I just showed you, right? Know for a fact, guys, that it does take time. But your execution matters. It matters greatly. So just like we were talking about up here, right? Where are we? Here we go. There we go. So now we learned how to identify the liquidity zone. So that means that your hard target was a very nice wick up here. You're thinking to yourself, right there, bam, I'm going to enter full risk right there. No, don't do that. Enter light here. And since you have a liquidity pool and you have a range of targets within it, choose one. See which one it does. But you're worried that it's going to break out there because you know, and this one is right there at the freaking 251.40. So then choose 251.40. So then you'll have 2 entries and you only risked what? Maybe 35% of the available entry that you allowed yourself to trade, should this have been an A+ trade and a B+ trade or a B- trade, whatever that is, right? So then you enter this. The risk happens, right? Okay, so then how do you continue risking on? Well, that's the thing here. As a short-term trader, I will validate the new support. So say, for example, that I wanted to make sure to enter the trade, should it be that we break into this area here, which was that liquidity pocket on top, then we dropped. Okay, so this would have been it right above here. This is your consolidation, right? Dip before you go. And that would have been my entry. Roughly 254.97. I would have risked right there. Let's go. And you take that gain, right? You buy in more. Because as a day trader, as a momentum trader, listen to this, okay? As a momentum trader, you are not worried about your you're not worried about your cost basis. You're worried about how much of the rate of gain is. So if you want to speed the rate of gain, then you would enter deeper. But it would need validations of support, right? This, what I can tell you here, here's our target, right? From 3-4 days ago, right? Here we are, finally arriving. 259.50 to 261.55. We're going to face a rejection here. And why would we face a rejection there, ARCa? Man, you suck. Why are you saying the downside again, man? I can't believe that you would talk about the downside after we're over here celebrating and you're just ruining my party here. Okay, well, the problem is that we are just about 20 minutes from closing an hourly bar, and bam, look at that. Look at that. Oh my goodness. I don't even know what to tell you, right? Good God, man. Okay. So the hourly closure is coming in 20 minutes, guys. And then guess what? Also, the 3 hour is coming in around 20 minutes. Man, dude. Is that really the reason, bro? Are you telling me that it's only because those 2 time frames are closing? Yes, because of those 2 time frames are closing, man. That's why. And you're at a critical resistance. This is mathematically set. We said that this would be the math on the top. Look, look, look. Bro, why are you opposing me? Why are you putting the freaking dislike in the video? Can you at least, whatever, leave it there. You'll just thank me later and shut your face, right? You'll learn this later. Oh my goodness, man. So then you're over here like, oh, dude, this guy's worthless, right? I'm never going to be able to teach anybody anything. Right, guys? This guy just told me that the war is over and also that the legislation and the courts, they said no longer are they going to chase XRP, and for some reason XRP doesn't move anywhere. Well, the thing is that also we tend to pre-price things. It's like you see all these people like this thing has literally been running from $1.90, and now you're sitting over here at $2.60, and they're saying, oh, it couldn't even run to $5. Okay, stay broke, bro. Stay broke, and you do you. All right, all good. People, guys, I'm gonna be very blunt with you and very, very, very honest with you. And this is why a lot of people sometimes dislike me or unfollow or do whatever. It's because I genuinely don't give a single fuck about this company. I don't care what they do. What I care about is the people. And are they gonna receive right information based on the statistics? Because no one is giving it. You guys are laughing your asses off over there. I'm sorry, man. It's just I have to be honest. I don't care, guys. I don't care. I just want to make sure that you guys know what I am seeing. That's all. That's all. That's all that is. That's all that it's ever been for me. You know, I don't have this. I don't own this stock. This stock. I don't own this coin. Right. I don't own it because I don't like to hold things like that. I like to just play on the day and take my gains, and that's it. Right? So that's why I'm a day trader, true at heart, but I can absolutely swing like a motherfucker. You know, I will nail those upside targets freaking far away for you. I know how to do that. Right? Because that's us being a versatile, we're being well versed as traders, right? We don't only practice one strategy. Remember, we said catalog one strategy, the second, the third, the fourth, and then start optimizing your robustness, right? We're going to figure out which one really performs well, and we're going to then practice it everywhere. You got to pummel the road. You got to pummel the road. It saved my life, guys, turning $80 into $130,000 in 5 months. It saved my life. And none of that money is available. Why? And I'm still behind. Because I didn't pay 2 years of mortgage. And I didn't pay like a year and a half of energy. Because I lost 2 jobs and my son went into this. He literally was just about to die. And that created a mess out of things. I didn't have the money for sitting, right? I couldn't do anything other than figure this out. So I studied 16 hours a day. And I'm not even kidding, because I would have to rock him to sleep sometimes for 3 or 4 hours and he wouldn't go to sleep. And I would just be rocking and sitting on the table. And I realized at one point, a couple weeks into it, I'm like, wow, I am doing nothing right now. So I decided, right, like a few of my, my brother and a few friends, my mentor also said, dude, you would be amazing at trading. And I said, I don't even know how to, like, who do you, like, I didn't know anything, guys. This was like the end of 2020. Just so you know, I've been trading for close to 4 years now. And I'm transparent about that too. I didn't get to live what my mentor lived, but I got to study what he lived. So you bet your ass, in the thousands of charts that I've literally charted, I looked back. I literally looked back. And I started studying the fundamentals of what happened there, who released what, why was that said, why did the Fed this, why did the Fed that? And I found out. And now I am here to hopefully help you shortcut all that. And I've helped so many so far, team, and I kid you not, I was so worried that I wouldn't be able to. But you guys are now part of just about 400 students that I've mentored. And that is a blessing in its own. And I can't believe that it's growing into those kinds of numbers. It's ridiculous, man. Guys, I appreciate your support so much. Now, Bulldozer saying, you the man, ARCa. Your team appreciates you. ARCa Bull for life, brother. Oh, hold on, guys. That's that little guy screaming over there. Just a quick moment. Just a moment. Hold on. team, I apologize. That's my kid. He's because of the iron. He's a little behind, right? But it's not everyone can deal with him. Dad is pretty much mom. So I worry, right? I worry how he's, even from sister, even from his mom, I worry about how he's being talked to. I'm way too protective. Okay, but yeah, guys, I see your comments now, and I can't believe how let's see. So John, man, you guys, that's so kind of you to share. So John is saying if you're watching him long enough, you'll realize he's right majority of the time. If you're betting on what's right the majority of the time, then you're gonna get rich, guys. I hope that I can be that, right? That'd be pretty interesting. Now, Fastman up here, let me switch it over a little bit. Fastman is saying, okay, I'm going to sound like a dumbass. How the fuck do you say trade without the outrageous trading fees? Okay. Do you have to buy a subscription to trading? I know, man, I know. No, it's just adjusting, right? You have to adjust your risk versus the Lioness. Thank you. You have to adjust your risk versus the reward, right? So you have to make sure that you make a certain amount of cash. Should you play the way that that you imagine it to be? So from your entry, you're going to be charged whatever amount. So that means that you would need a certain amount of percentages above that initial, right, in order for you to win in the first place. So that means that your play has to have an output value of so-and-so, right, so that you can make at least whatever. So I hope that makes sense there. But that's all, that's all in the executions and stuff, right? So this is how we were able to kind of put this thing together here, right? But guys, I know that I haven't read so many of your comments here, and I love that you guys are participating with me here, and it's so humbling that you can watch this, right? I don't usually show these private lectures, you guys. So, but please, should you have any interest on this, guys, just literally all you have to do is just reach out to me, right, at arcabulls@gmail.com, and just ask for the information, right? I do have a massive respect for my students, right, guys? Know that. The respect to my students that's everything to me, and I want to make sure that everybody kind of I want to make sure that no one gets left behind. That's always been the case here, right? So you'll hear me sometimes in the trade, like literally live in the trade. I will stop like talking about anything just so I can make sure that the one trader that's in trouble, I can get him out of trouble. So I'll speak to the trader later on, right? and I'll make sure to kind of elaborate on some notes here and there. But I'm that type of person, right, guys? I'm the type of person to try my best, to get people to not feel like they're left behind. It's tough as ARCa Bulls is growing into many thousands now. But it's always been around that premise. I've always wanted to be just as forth. I just wanted to be a cool dude, man. That's all. I just wanted to be a cool guy and hopefully help out a bunch of people. And I know these charts, guys, because trust me when I say this, actually, you know what? I don't even have to have you like trust me when I say this, because if you can just go into my YouTube channel, right? Go into my YouTube channel and you're going to find a playlist called Live Chats, and those live chats I haven't done in a long time because that's what I used to do, right? For free, right? So whenever I would go on these lives, I would look at by request anything that anyone wanted, right? So because I did that, I was able to also practice in turn, right? So I would get all this like massive opportunity to review different tickers that I've never heard of, and I would try my best, right? And that started growing. It started growing into so many people that I really couldn't keep up, guys. So this right here, live chats. See how it says like the last one was December of 2022? Look how many videos there are. 591 live chats that I did. Each one was several hours, 2, 3, sometimes 4 hours every night. I was cataloging anywhere between 14 to 21 tickers charted for 591 days in a row. So all I wanted was for my son to stay alive. All I wanted to do was become the best trader that I could ever become for him. I just needed him to live. I didn't care about anything else. And I didn't even know that I was becoming an influencer. That was never the idea. But I hope that I resonate well with every one of you, team. And I really do mean that. Right? I hope that I can resonate well with you. And I hope that you can take into consideration joining me here. So I'm gonna leave here the Square link, right? So I'm not joking. It really is just $100 for 9 weeks live with me. And let's start it. Let's figure this out. Let's do this. As soon as you sign up there, you just send me an email here, guys. And then I'll put you down. You'll receive a welcome package here in the next week or two, because we're going to start on the July 26th. And this is the last lecture here. We're going to repeat it again on Saturday, right? But you're experiencing the end of the course here. And me giving you the upside target as we go. So you'll likely be in something, you'll likely be in something in the future, and I'll likely be giving you targets for that too. So, oh man, I love you guys so much. And BTC going for all-time highs. Yeah, guys. Please remember, okay, if you are observing, if you are watching me, remember that we spoke of these upsides coming in just about a few weeks ago, and we were talking about the potentials of an explosion, and that would be BTC to 127 to 130,000. Some iterations were signaling that probability, and now that we've reached like 118s and all that stuff, guys, yeah, there's a critical break somewhere there. I still think that we have another 10 grand to go, maybe even $12,000, right? So that means that XRP can likely make some outrageous moves here, right? Well, you already heard my upside target yesterday for the more immediate short term. That's your 290 to 306. That's still there. The chart that we're observing now, this was your closer target, right? 260s, 261, all good. It's playing according to what we expected, right, guys? So that's it's stressing. It's very stressful, but I love this, guys. Okay, so I'm saying, guys, that if you are not members of the Discord, you don't have of the ARCa Bulls Discord, because right here these are just my students. We're in a private Discord outside of the ARCa Bulls server. So if you are not part of the ARCa Bulls server, you can always just come in, and the verification process is a little bit weird, but I always try to help with that as well. So you would just come in, and you'll literally be able to see me live, because after this, I am gonna probably go to the market prep, right? We'll go look at other tickers that we can trade in the AM for the next day, and we do this every night. It's the after party. Right? So I invite you all, and you can just go ahead and come into the Discord, and that's the link right there. But yeah, guys, I'll extend as many seats as I can, right? But usually there's around 30 to 40 people that join for every lecture, and so try to get in that as soon as you can, and we'll get you enrolled. All right, team. But with that said, I think this is a pretty good place to leave off. I appreciate each and every one of you greatly for observing today. And of course, my master's students, right, guys? Please remember that the second lecture that we provide is not exactly a repeated lecture. It's definitely an extension of it to give you more information as a student, right? I want more content that you can use and always come back to. They're recorded or filmed, right? So they'll always belong to you. And and then you'll be track number 9, right? That's coming up. When your track 10 students come up, all of the track 9 students and 8 and 7 and 6, right? All of those will be invited to join that class too. You can always repeat the lecture that you just took. And if you continue on with me into strategies, you can also repeat strategies once you finish that as well. Okay, guys? So reach out to me. Let's make a change into our portfolio, right, guys? Let's do this the right way. And then everything else will be chilling. You won't regret it, fam, says MFGA. Thank you, buddy. I really appreciate you. Okay, guys. So I'm going to go ahead and cut it out here, and I'm going to prepare here for the market prep tonight, and everything will be good. All right, team. I wish you well, a very, very good rest of your night, and I will speak to you mañana. Okay. Goodbye, team. Have a good night. Take care. Adios.